Meantime, you know, there are three of America's most highly regarded and best-known investors. You might call them the money moguls. Warren Buffett of Berkshire Hathaway, Larry Tisch of Lowe's Corporation, and global investor George Soros. They have all made billions of dollars by successfully navigating rocky financial markets. Now they are coping with how to stay rich in the very pricey and very volatile markets of 1997. In the first of three stories, CNBC's Greg Miles looks at how the bets of the legendary Warren Buffett are paying off this time around. Hi, Greg.
So Warren Buffett really is the high archbishop of equity investing.
Indeed he is.
Warren Buffett has benefited greatly from the bull market in blue chip stocks. His portfolio centers around 10 blue chip stocks with a total market value of around $33 billion. But the bull market and Buffett's portfolio look a bit tired.
He's been called the Oracle from Omaha, and for good reason. Investment mogul and billionaire Warren Buffett has earned a reputation among investors as a savvy picker of blue-chip stocks. Buffett's buy-and-hold investment strategy has yielded huge returns in his wildly successful company, Berkshire Hathaway. But is Buffett's portfolio of blue-chip stocks running out of steam?
I'd say two-thirds of his positions are down about 10%, but then there are about a third that would be up.
So it's no wonder that while the Standard & Poor's 500 index is up by 3.2% in the past 8 weeks, shares of Berkshire Hathaway are down sharply by 7.8%. For example, Coca-Cola, his largest holding, has fallen by 13.2% in the past 8 weeks, giving Buffett a paper loss of $1.8 billion. Gillette, his second largest holding, has fallen by 10%, a loss of $468 million. And Wells Fargo, another big position, has fallen by 16.4%, a loss of $309 million. But it's unlikely that Buffett will sell these stocks and break with his long-term strategy.
One of the major hallmarks of his success is that he does not sell, and as a result, he does not pay capital gains tax on these holdings. He does not pay transaction costs.
Buffett is probably restructuring part of his portfolio, but investors won't know it until he files documents with the SEC 4 months after a deal.
That should be adequate time for someone like Warren Buffett to get in or out of a stock without the public knowing.
Buffett has avoided investing in high-tech stocks, explaining that he doesn't know the sector. But to boost his performance long-term, experts say Buffett may have to buy high-tech shares.
If you're going to start out now, which would you rather own? The stocks that the master has already bought and have already run up, or would you like to buy the stocks that meet his criteria, that have not run up as much, that he has never owned and perhaps may someday?
Experts say that the shares of Berkshire Hathaway may underperform the market over the next year or so, but they have no doubt that Berkshire Hathaway will continue to be a stellar performer in the long term. Sue.
Okay, so he didn't do so well on some, but are there any of his stocks that are outperforming the market at this point?
Well, in the past 8 weeks, for example, Amex, which has been a target of takeover speculation for several months, is up 7 or 8 percentage points. If you even go back to the beginning of the year, Solomon Brothers, which he's been actively involved in a turnaround, they're up about 30%. So it's not all bad for Warren Buffett.
Indeed not. Thanks, Greg. We'll look forward to part 2. And as a matter of fact, tomorrow at 12:30 p.m. Eastern Time, Greg will be here. He will take a look at billionaire Larry Tisch and why his company is sharply underperforming the stock market. Meantime, speaking of the stock market, our Bob Pisani joins us now. He has some news on Hudson Foods. What's going on, Bob?
Hi, Sue. Just wanted to get back to you real quickly.
For his aggressive investment vehicles called hedge funds. Now, those funds are up by as much as 70% through July, the kind of performance that has made Soros a billionaire. In the third of his 3-part series on money moguls, CNBC's Greg Miles takes a look at Mr. Soros and how he operates. Greg.
Peter, if there were a pantheon, they would make Soros a co-deity along with Warren Buffett. George Soros, in recent articles, has expressed concern about the excesses of modern capitalism. Don't believe him. After all, the guy made at least $800 million last year, according to one survey. That makes him the highest-paid exec on Wall Street.
Global investor George Soros thrives on volatile financial markets. So 1997 has been a good year for his exotic investments called hedge funds. Soros has made a killing betting on the direction of global currencies, including the devaluation of Thailand's currency in July. He's also making good money in both U.S. and Russian stocks.
The market actually is oriented well towards someone who's looking for a short-term result. If you gamble correctly, you'll get paid off handsomely.
After losing money last year, Soros's flagship quantum fund, with $5.9 billion in funds, is up 27% through July. His quantum emerging growth fund, with $2.2 billion, is up 51%. And his quota fund, with $2.7 billion, is up 71%. Experts say Soros is making frequent changes in his U.S. stock portfolio. That includes selling pricey financial stocks.
He was about 4% in financials last year, went up to about 10% of his equity weighting, and now down to 7%. So that's fairly dramatic for someone's equity portfolio to be changing that swiftly.
Financial sell-offs include Bank America, Conseco, and SunAmerica. At the same time, he boosted his stake in technology stocks from 16% of his portfolio in the first quarter to 21% in the second quarter. He bought stocks that have taken hits, like Texas Instruments, Motorola, and Novellus Systems. Soros hasn't won all his bets. Experts say he lost big money this month, perhaps more than $100 million, by speculating on the merger of British Telecom and MCI Communications. And angry politicians in Asia may force him to cut back betting on currencies in that part of the world. Also,
for the next several months, the big challenge is you have this very volatile U.S. stock market, long-term direction. Is it still going up, or is there going to be a major correction? So that's a major concern, how to hedge, where to hedge, as well as in the emerging markets where he's done extremely well in Russian investments and other Eastern European countries. Are they overvalued?
George Soros declined to comment for this story, but experts say he may have put too much money into the U.S. stock market. If these investments are not fully hedged, his fund performance could be hurt by a market plunge. Peter.
Greg, you did a nice job on this series this week, and you looked at Warren Buffett, Larry Tisch, and now George Soros. Which investment style do you think is appropriate for this kind of market with all the volatility we're seeing?
Well, I think obviously in this kind of market it would have to be obviously a Soros, but also over the long term, Soros in the 90s, his quantum fund has had a 35% annual compound growth rate in profits, double the 17% for the Standard & Poor's, and also above the 14% for the mutual funds. So it looks pretty good.
So even in periods of volatility and smooth ride, Soros still wins.
That's right.
Okay, Greg, thanks a lot.
Thank you.
Here's a look at all the news that broke after the closing bell. Mexico and Brazil